Bismillahirrahmanirrahim. This is the sixth video on financial accounting and fourth on accounting information system. In this video, we are going to solve exercises on analyzing the effect of business transactions on the accounting equation. We'll be doing exercises on generalizing transactions, posting them into the ledger, and finally preparing the trial balance. Please like, subscribe and share my channel and hit the notification bell button to alert you for the latest video. For all of your questions, comments and suggestions, please put them in the comment section below. And for webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Accounting is AK. We hope that this video helps students in their academic development and teachers in enhancing their lesson plans and teaching methodologies. So let us start with the first exercise. On April 1, Vagabond Travel Agency Incorporation has established these transactions were completed during the month, and we have to prepare a tabular analysis of the transactions using these common column headings. We have cash, account receivable, supplies, equipment, accounts payable, common stock, and retained earning, and that is what we have over here. And then for the retained earnings, we have to have a separate columns for revenues, expenses, and dividends. So let us start with the first transaction. Stockholder invested 30,000 cash in the company in exchange for common stock. So obviously they are making an investment. So cash is going to increase by 30,000 and common stock is going to increase by 30,000. Then paid 900 for April office rent. So we are paying, so cash is going to decrease by 900, and this is an expense of rent. This is rent, office rent expense. Then purchase office equipment for 3,400 cash. So again, cash is decreasing by 3,400. We have purchased equipment for 3,400. Purchase 200 of advertising in the Chicago Tribune on account, and because this is an advertising expense on account, our liability increases by 200, and this is an advertising expense for 200 as such. Then paid 500 cash for office supplies. So again, cash, there we are paying, there is payment of cash, so cash decreases by 500, and this is for office supplies. So office supplies increase by 500. Then earn 1,200,000 of for services provided. Cash 3,000 is received. So cash is received 3,000, cash increases, and the balance of 9,000 is billed to customer on account. That means there is an account receivable of 9,000, and this is a revenue now for 12,000 riyal. Paid 400 cash dividend. So when we pay 400, cash decreases and dividend is going to be for 400. Then paid Chicago Tribune amount due in transaction number 4. In transaction number 4, there is an accounts payable of 200 and we are paying this amount. So cash will decrease again by 200, and now our accounts payable decrease by 200. Paid salaries for 1,800, so 1,800 cash will decrease, and so our salaries expense. Then received 9,000 in cash from customers billed previously in transaction number 6, and we can see that in transaction number 6 we are receiving 9,000. So cash will increase by 9,000 and accounts receivable will decrease by 9,000. So that's all that we have for the transactions, and let us see the totals. The total for cash will be 34,800. There is no accounts receivable, 500 for the supplies, 3,400 for the equipment. Accounts payable will be 0, 30,000 for common stock, 12,000 for revenue, and this will be 2,900, and dividend is 400. So now let us make the total for the assets, and the total for the assets will be cash plus accounts receivable, supplies and equipment, and the total will be 38,700. For liabilities and stockholder equity, the total will be 0. Obviously, accounts payable, common stock plus 12,000 minus expenses and minus dividend. So the total is going to be again 38,700, and the total of assets is equal to liabilities plus stockholder equity. Then we go for the part B. From an analysis of the retained earning column, compute the net income or net loss. Now, net income or net loss is the total of revenue minus total of expenses, that is 12,000. 12,000 minus 2,900, and this will be equal to 9,100. Okay. Next, let us move on to another exercise. And here we have Samuel Aldrich. He started his own delivery service, Aldrich Service Incorporation, on June 1. The following transactions occurred, and we have to show the effect of the transactions on the accounting equation using the format. We have the format over here. Assume the note payable is to be repaid within a year. So let us see how we are going to record it. On June 1, invested 15,000 cash. So cash is going to increase. So will the common stock. Then purchased a van for delivery for 15,000. So our equipment increases by 15,000. And we are paying 2,000 cash. So cash decreases by 2,000. And a note payable for the remainder. So for the remainder, the note payable will be 13,000. 15,000 minus 2,000. Then we are paying rent for 600. So cash decreases by 600, and this is rent expense. Then performed 2,400 of services on account. On account means not for cash, and we are not going to receive cash for our services. This is accounts receivable 2,400, and this is revenue for 2,400. Then we have paid cash 300 on dividend. So cash is going to decrease by 300, and dividend is for 300. Purchase supplies for 240 on account. That means not for cash. So supplies is plus by 240, and our accounts payable is also plus by 240. Okay. Then received cash payment of 750. So services provided in transaction number 5. So we are receiving 750. So 750 is plus, and our account receivable will decrease by 750. Received a bill for 200 to cover advertisements in Tri-State News. We have received a bill. We have not paid it. And if we have not paid, our accounts payable is going to increase by 200, and the expenses are going to increase by 200, and this is advertising expense. Then received a cash payment of 1,500 for services provided. So cash is increasing by 1,500, and we are providing services, that is revenue for 1,500. Made cash payment of 500 on the note payable. We are paying 500. So cash decreases and we are paying our notes payable. So our notes payable will decrease by 500. Then paid 180 for utilities. So cash decreases by 180 and this is a utilities expense for 180. Then paid for supplies purchased on account on June 12. On June 12, we have purchased supplies for 240 and we are paying this amount. So cash will be minus by 240 and accounts payable will be decreasing by 240 as well. Then we are paying salaries of 750, so cash decreases by 750 and this is an expense for salaries expense. So now we can make the total. So that for cash, the total is 12,680. One for accounts receivable 1650, 240, 15,000, 12,500, 200, 15,000, 3,900. Expenses are 1730 and dividend is 300. So now we make the total for the assets and the total will be 29,570. Next we go for the total of liabilities and stockholder equity and this will be again this is equal to 29,570 and the equation is balanced. Now we go to the part B and C and here we what all I have done is I have put this solution in a tabular form to make it readable for you all in case you find difficulty in reading these numbers. And from this information we are going to prepare the income statement. So for the income statement we have the revenues and the revenues are how much? Revenues are 3,900. Then we have the expenses and the expenses are we have salaries expense of 750, we have rent expense for 600, we have advertising expense for 200 and utilities expense for 180 and the total is 1730 and total revenue minus total expenses will be 2170. Now and then they say prepare a classified balance sheet and for this we are going to prepare the balance sheet. First we record the assets and it is classified, so we have current assets, they are cash 12,680, we have accounts receivable 1650, supplies 240 and the total will be 14,570. Then we have equipment and equipment is 15,000 and the total for the assets is 29,570. Then we have the current liabilities and for this we have notes payable as 12,500. Accounts payable is 200 and the total is 12,700. Now we have common stock of 15,000 and retained earning in this case will be the total revenue minus total expenses, that is the profit, and the profit was 2170. Sorry, it is 2170. Is there any beginning retained earning? Okay. So when we say so the we have the net income of 2170, and from this we will subtract the dividend of 300, so that is equal to 1870. For you see, when we prepare calculate the retained earning, we take the beginning retained earning, and in this case we have 0. To this we add the net income, that is the net income is 2170. We subtract the dividend of 300, and that's how we get 1870. So the total for stockholder equity is 16,870, and the total is 29,570. Let us move on to the next exercise. Adnan opened a law office. On June, the balance sheet shows the following information, and this is not a company or a corporation. This is a sole proprietor business, and the reason why I am saying this is because we can see that he can withdraw money from the business, and this is possible only in the case of sole proprietorship or partnership. This is not possible in the case of a corporation. Now we have to prepare a tabular analysis with July 31st balances, and these are the balances on July 31 on July on July 31st. uh, so we have cash 4,000, we have accounts receivable 1,500, supplies 500, office equipment 5,000, accounts payable 4,200, and Adnan capital is 6,800. Now we have to look into the transactions. Collected cash on account is 1,400. When we are collecting cash, cash is plus, and account receivable will be minus by 1,400, and now the total will be 5,400. This will be 100, 500, 5,000, 4,200, and 6,800. We go to the second transaction, paid cash on accounts payable, and when we are paying cash 2,700, and this is on accounts payable, so our liability will decrease by 2,700, and the total will be 2,700, 100, 500, 5,000. This will be how much? This will be 1,500 and 6,800. We move on to number 3, earned revenue of 9,000. Of this total amount, this amount was collected in cash. We have collected 3,000 cash, so cash is plus by 3,000, and we have revenue of 9,000. That will be with the with the owner's equity, that is 9,000, and then uh, uh, with the balance due in September, that means account receivable is the balance, that is 6,000. Once again we make the total, and the total will be 5,700, 6,100, 500, 5,000, 1,500, and 15,800. Then purchased additional office equipment for 1,000. So equipment is going to be plus by 1,000. Of this total amount, a down payment in cash of 400 was done. So cash decreases by 400 and the balance is on account. That means there will be the balance amount and the balance will be 600. Our liability accounts payable is going to increase by 600. We make the total again. And the total is 5,300, 6,100, 500, 6,000, then 2,100 and 15,800. Then we have paid salaries of 3,000. Salaries expense. We have paid rent of 900, rent expense, and paid advertising expense 350, advertising expense. So we have the salaries expense of 3,000. When we pay, it is minus, cash will decrease, 900 will decrease, and 350 will also decrease. Once again, we make the total, and the total is 1050, 6,100, 500, 600,000, 2,100, and then we have here 10, how much is this? 11,550. Okay. Then withdrew cash for personal use 750. So cash will decrease by 750 and the capital will decrease by 750. Drawing. So we make the total. So the total will be 300, 6,100, 500, 6,000, and then 2,100, and this will be 10,800. We move on to number 7. Received money borrowed from Standard Federal Bank on a note payable 2,000. So when we receive cash, cash is plus, and now our notes payable is plus by 2,000, and we make the total 2,300, 6,100, 500, 6,000, 2,000, 2,100, 10,800. We go to number 8. Incurred utility expense of 250. So, and this is on account. So our accounts payable is going to decrease by 200, and accounts payable will increase by 250, and the equity will decrease by 250. Utilities expense. So that's how the balances are going to look like. And if we make the total 2,300, 6,500, 6,000, 2,000, 2,350, and this will be 10,550. Okay. We go to part B and we have to prepare the income statement, and we'll be doing this on the next page. Once again, this solution has been put in a table to make it easy for you to read. And we start with, and here they say we have to prepare the income statement. So income statement is the total of revenue minus expense, and revenue is 9,000. Then there are expenses. We have the salaries expense of 3,000. We have rent expense of 900. We have advertising expense of 350, and we have utility expense of 250 as well, and the total will be 4,500. So total revenue minus total expense will give us how much? 4,500. This amount will be recorded in the net income as 4,500. Now, when we prepare the owner's equity statement, this is the second part. We have to prepare the owner's equity statement. And when we say that is 4,500, the net income and the capital was 6,800 in the beginning. 6,800. So this the total is 11,300. From this we will subtract the drawing of 750 and the total will be 10,550. Now this amount is the Adnan's capital 10,550. We record the liabilities. We have notes payable of 2,000, accounts payable 2,350, for total is 4,350. So when we make the total will be 14,900. Let us look into the assets. We have cash 2,300, accounts receivable 6,100, supplies 500, and office equipment 6,000. So when you make the total once again will be 14,900, and mathematically we have prepared the balance sheet correctly because the two sides are equal. Let us move on to the next exercise. Now, in this exercise, we have to journalize these transactions and we have to post in the ledger to the T account and prepare the trial balance. So first of all, look at the first transaction on April 1. Stockholder invested 18,000 cash. So obviously cash is debit by 18,000 and common stock is credit by 18,000, and this is issued shares of stock for cash. Okay. Then we have another one on April 1. Hired a secretary receptionist at a salary of 375, payment payable monthly. So right now we are only hiring, so there will be no entry for this transaction because the transaction has not occurred yet. Okay, we go to April 2. Paid office rent for 900. So rent expense is debit for 900 and sorry, it should be April 2. Rent expense is debit by 900 and cash is credit by 900. Paid monthly office rent. Okay, we move on to April 3, and on 3rd of April purchased architectural supplies on account from Spring Green Company for 1,300. So supplies is debit by 1,300 and we are purchasing on account. So accounts payable is credit by 1,300. Purchased supplies on account from Spring Green Company. Okay, we move on to number 10, that is April 10. completed blueprint on a carport and build client 1900 for services. We are billing them, we are not receiving cash, so this will be account receivable debit by 1900, and this is service, so service revenue is credit by 1900. Billed client for services rendered. Okay. Then we have 11th of April received 700 cash in advance. April 11. So cash is debit by 700 and we are receiving in advance. So this is unearned service revenue 700. Received cash advance for future services. Okay. Then we go to April 20. Received 2800 cash for services completed and delivered. Now this is cash is debit by 2800 and this is service revenue because we have delivered, not unearned service revenue, but service revenue 2800. Services delivered. Okay. Then we go to April 30. Paid secretary receptionist for the month 1500. We are paying salaries. So salaries and wages, and these are expense debit by 1500 and cash is credit by 1500. Paid monthly salary. And then again there is another transaction for April 30. 300 paid 300 to Spring Green. So when we are paying Spring Green on account, now if you can remember, Spring we have our accounts payable of 1300 and from this we are paying 300, so our accounts payable will decrease by 300, so accounts payable is debit and cash is credit by 300. Paid Spring Green Company on account. Okay. So we have generalized the transactions and now we have to post them to the ledger. Let us go to the next slide, and I have recorded made in a tabular form the same journal entries that you see over here on the left hand side, and from here we are going to prepare the T account. So we start with April 1. On April 1 cash is debit by 18,000, and then we have common stock credit for April 1 for 18,000. Then there is no transaction for April 1. We go to April 2 now, and for April 2 we have rent expense and that is debit. April 2 rent expense debit by rent 900 and April 2 cash is credit by 900. We move on to April 3. We have supplies debit by 1300. April 3 and accounts payable is credit by 1300 and the date is April 3. Okay, we go to April 10 now, and on April 10 accounts receivable is debit by 1900, and that is April 10, and service revenue is credit for April 10 by 1900. Then we move on to April 11, and on April 11 cash is debit by 700, and there is unearned service revenue for 700. Then we move on to April 20. Again, cash is debit by 2800, and there is service revenue of 2000 April 20, 2800. Then we have April 30, salaries and wages expense, it is debit by 1500, and cash is credit, so April 30, 1500. Then we have accounts payable, and accounts payable is debit, so accounts payable April 30 is debit by 300, and April 30 cash is credit by 300. Now we make the balance. Remember that all assets will have a debit balance, that is the total of debit will be more than the total of the credit, and you can see that if we make the total of the debit and then subtract the total of credit, we have the balance of how much? We are going to have a balance of 18,800. For rent, for common stock, obviously there is 18,000 minus, because here we have 0, so we have a credit balance of 18,000. Rent expense has a debit balance of 900. Supplies has a debit balance of 300. Accounts payable, you can see that here the credit is more than the debit, so 1300 minus 300 will give us a balance of 1000. Accounts receivable has a balance of 1900. Salaries and wages 1500. Service revenue, we will make the total, and here we have 0 over here, so the total of credit is 4700. Unearned service revenue will have a credit balance of 700. Finally, we have to prepare the trial balance, and for the trial balance we will take the balances from the ledger, and let us see how we do it. Now I have put again the ledger in this table, and I am going to simply take the balances. For cash we have a debit balance of 18,800. For common stock we have a credit balance of 18,000. For supplies we have a debit balance of 1300. Accounts payable is 1000. Accounts receivable, supplies is 1300, and then we have accounts receivable 1900. Salaries and wages 1500. Then we have rent expense 900. Accounts payable is 1000, and service revenue is 4700, and unearned service revenue has a credit balance of 700. So if we make a total, the total is 24,400. This one is also 24,400. And if the two totals are not equal, trial balance, then there is a mistake in the trial balance. Let us move on to the next exercise. And here we have the accounts, but we do not know the balance for cash. And now we have to prepare a trial balance and fill the missing amount for cash. So we have the trial balance over here, and we start with accounts receivable. Accounts receivable, obviously this is an asset, it will have a debit balance. Accounts payable, accounts payable is 8,400. For cash, we do not know, we have to find out this value. Equipment is 59,360. Then we have debit, obviously, maintenance and salaries and wages expense. So maintenance and salaries and wages expense 7,428. And then we have repair expense 1,958. Insurance expense is 900. Prepaid insurance is 2,200. Prepaid insurance is an asset. Service revenue is will always have a credit balance. Dividend will have a debit balance of 700. Common stock is how much is common stock? Common stock is 40,000. Then salaries and wages payable is 820. Then we have notes payable. Notes payable is how much? 28,450. We have retained earning of 5,200. So this is all that we have for the trial balance, and obviously we have to find out the value for cash, but we can make the total of the credit, and the total of credit will be 98,370. So obviously, since this is the trial balance, so this value must also be 98,370. We will make the total of other accounts, the values that are there, and if you excluding cash, this will be 85,370, and 98,370 minus 85,370, oh sorry, 85, this total will be 85,946. So 98,370 minus 85,946, this will be equal to 59,360. So this is the balance for cash. Now once we have the trial balance, and we have the value for cash, now we can prepare the income statement. And for the income statement, you know that it is revenue minus expense. So we have the revenues, and we have service revenue. We have the service revenue of 15,500. And then we will be having expenses, and we have the maintenance and salaries and wages expense of 74. Maintenance and salaries and wages expense of 7428. Then we have the repair expense of 1958. Then we have the insurance expense, and that is for 900. So we make the total, and the total is 10,286. Now revenue minus expense will be 5,214, and this is the net income. Then we have to prepare the retained earning statement, and we have over here, and we start with the retained beginning retained earning, and that is on July 1, and the beginning retained earning was 5,200. To this we are going to add the net income, and the net income is 5214. We add this up, and this is going to be equal to 10,414, and from this we are going to subtract the dividend, and that is 700. So the retained earning on July 31st will be 9,714. So that's how we prepare the retained earnings statement. And finally, we have to prepare the classified balance sheet. And let us see how we do that. Now, on the next slide, I have simply put all this information in a table. We have the trial balance. You can see the total of cash as 12,424. Oh, I made a mistake here. So the total of the uh, the total of the of the credit minus 85,946, the total will be 12,424. Okay, so we have cash 12,424, and we have the trial balance, we have the same net income and the retained earning statement, and finally we prepare the classified balance sheet. For the classified balance sheet, we are going to have the first of all the current assets, and current assets are, what are the current assets? We have the cash 12,424. Then we have accounts receivable of 13,400, and then we have the prepaid insurance of 2,200. So we make the total, and the total current assets are going to be 28,024. Then we have only one and long-term asset, and that is equipment. So we have equipment, and equipment is 59,360, and we make the total. So the total assets will be 59,28,024 plus equipment, that is 87,384. Next we have we prepare the liabilities. So first of all, we start with the current liabilities, and the current liabilities we have accounts payable for 8,400, and then we have what else? We have salaries and wages payable 820. So we make the total current assets will be 9,220. To this we are going to also add the notes payable, and this is classified as long term because this is for the next year. So we have the notes payable, and the notes payable is 28,450. So that is equal to 37,670. So these are our total liabilities, and then we prepare the stockholder equity. So for this we have first of all the common stock, and the common stock was 40,000, and then we have the ending retained earning, and that is 9714. Now we make the total, that is 87. Sorry, the total will be 49,714, and the total for the liabilities and stockholder equity is 87,384, and the two totals are equal. So mathematically the balance sheet is correct. So this completes the fourth video on accounting information system. I hope you have enjoyed this presentation, and if you found value in this video, then please like, subscribe and share my channel, and hit the notification bell button to alert you for the latest video. For webinar and guest speaker invites, please send me a message at accountingamer@gmail.com. Remember, effective questioning brings insight, which fuels curiosity, which cultivates wisdom. If you have any question or any suggestion regarding this session, then please put them in the comment box below or by email, and inshallah I will reply you back. Thank you so much and happy learning.